Good morning and happy Friday to my futures family. It's time for the Market Prep Friday, June the 9th. My name is John Hoagland. Thanks for trusting me with your time. As always, we are seeking accurate context, always reminding ourselves of good risk management and remaining patient in our trading. Happy Capital Preservation Friday. It's been an interesting, challenging, always something to learn week, right? We don't have any economic releases this morning, so I just kind of focused on the fact that at 7:30 this morning, the Canadian unemployment rate came out. The last release a month ago was 5%. They were expecting 5.1%. It came out 5.2%. What that's going to mean to our markets is negligible, probably, but we are just kind of freewheeling today. Also, it's another one of those days where important nuances are elusive. Remaining ruling reasons seem to be a little bit further apart. There's always opportunity, though, even in range bound days. I used to call those cash register days because you get kind of known extremes and you fade those extremes. And if those extremes hold, you can take profits several times during the day during range bound trade. We'll take a look at that on the charts here shortly. And as far as news this morning, I mean, U.S. stock indices opening relatively steady. S&P is a point from settlement. Dow down a little bit. NASDAQ up a little bit. That seems to be a bit of a trend that's been going on. So we're kind of mired in rollover range balance, awaiting new information, a lot of anticipation for what's coming out next week. Starting on Tuesday, the May CPI numbers coming out. Wednesday, the May PPI numbers coming out. Also, of course, the FOMC rate decision at 1 p.m. Central on Wednesday. Thursday, jobless claims, retail sales for May. Philly Fed industrial production. Friday, Michigan sentiment, and also Friday, don't forget, is expiration, quadruple witching expiration. So you are, however, going to be without my services on Thursday and Friday of next week and the following Monday and Tuesday. I like to fashion myself as the hardest working man in the industry, but yes, I'm going to take a little time off, going to take my wife, go down to Florida and horse around for a few days. We'll be back the following Wednesday. Kind of, happy that I'm going to be here through Wednesday so we can see the FOMC rate decision together. And then, of course, next Thursday, Friday, and the following Monday and Tuesday, I will be off. There will be market preps. There will be everything but make home money. There won't be any make home money on those days. So we'll look forward to getting back to those when I return on the following Wednesday. Crude pricing has calmed a little bit overnight after a volatile session yesterday. Seems relatively centrally located inside yesterday's range. And again, we'll see that very shortly on the charts. VIX this morning down slightly at 1364, now down below 14. Dollar index pretty much steady, maybe a little bit higher at 103.38, and the yield on the 10-year pretty much right where it was yesterday, 3.74%. It was 3.78% at this time yesterday. So no major changes in the VIX, the dollar index, or the yield on the yield on the 10-year. As always, we ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the Market Prep. Make sure you subscribe to our YouTube channel so you get notification when we do go live. Caprice 101, first in the room this morning, winning the prize. Scott saw, and he also conquered. Rooster, good morning. Charles J. Shaw. Lacey says good morning to everybody as well. Haggle Matters, Dan Trader, good morning. Matthew, John, Taurus Trader. Again, Lacey says good morning to everybody. And yes, we hope everybody has had a good week, manages to preserve capital today and have a nice weekend. Of course, you may notice my shirt. My kids bought tickets for the three of us, myself, my daughter Sarah, and my son Luke, to go see Dead and Company at Wrigley Field. The concert's tomorrow. I'm amped for it. I can't believe the kids did this for me. I was always a fan of the Grateful Dead, and I haven't seen Dead and Company. I haven't seen the Dead since Jerry passed away, and that's a long time ago. And I'm really looking forward to seeing a really good concert. John Mayer is going to be standing in as always for Jerry Garcia, and I'm always looking forward to it. I got my little Jerry right up here, and so we're getting amped up for the concert tomorrow. It's at Wrigley Field. My daughter actually lives a block from Wrigley Field, so we're going to pregame there. We're going to be able to walk back and forth to the concert. No parking nightmares, no nothing. It's going to be a whole bunch of fun, and again, I'm looking forward to it. Jason, where was I here? Alejandro, Don Clemens is back. It's good to see you. Hope things are going well. Pete, good to see you. Tim, Cags, Jason, Robert, John, Bill, Josiah, Chaz, good morning. Will, chart language, yo. Les Frick, you love the shirt, right? Looking for one or two good setups, and I'm going to be going to the fishing camp for the weekend. Nice, Rooster. Yes, roosters love fishing. Of course, doesn't everybody? Any day fishing is a good day. General, good morning. Sarah Hall, prayers and love to you as well. Happy Friday and a couple of beers. Sure thing. Robert Shaw, Grateful Dead Friday. Hope that's a sign for the market. Not a sign for the market, right? Barry, good morning. Roll charts today? No. The S&P is the September contract, as I look at it this morning, it has about half the volume as the June contract. Typically, switch day is going to be on Tuesday, but it's never an exact science. I'm going to be setting up the weekly kickoff levels for the September contracts, probably for the equities and for the currencies. We probably won't roll until Tuesday. It's, again, not an exact science. If you roll Monday, if you roll Wednesday, you're going to be fine. We'll focus on that. Then I will be here early in the week to make sure everybody gets moved over to the September contract at the right time. But again, it's not an exact science. You're not, there's no rule violation. As long as you get pretty close to the roll day, that's fine. It's not that important, but it is important that you do get the move switched over, right? Thank you, General. Thank you, Trading Research. Good to see everybody. If I missed anybody, I'm sorry. Dr. VJ, I did have a conversation with Jack. He said he's going to reach out to you. Josiah. Rooster, Shy T, Alfred, good morning. Chart language, Stephen, Henry. The rally shirt. There you go. I'm down for that, right? Yeah, the dead are mostly dead. Not true, just Jerry. The other ones are still kicking. We're gonna see Bobby, and I think Bill is gonna be there. I don't know about Phil, but I'm looking forward to a good show. Timothy Simao, good morning. Trading Research. Yeah, haven't seen the dead since Jerry passed either, right? First show, 87 Alpine Valley. Haven't gone to see DNC either. I think I was at that show at Alpine Valley in 1987. As a matter of fact, I think I have pictures of it. Maybe it was a little bit earlier than that. But every time they came to Alpine Valley, I was there 100%. Good morning, Vince. Good morning, Steven. Good morning, Q. Yeah, it's like I said, it's not an exact science. They used to roll the Thursday before expiration, the Thursday a week before expiration. Now they've kind of changed it to the Tuesday. It's okay if you even want to change today, but just be careful. You're going to be a little bit less liquidity because of the volume. Just check your dome, check the volume, and you can kind of look at when the right time to switch is. We're going to be looking at Monday or Tuesday, just looking at the volume in the S&Ps today. Again, the September volume about half the June volume. So not today, maybe Monday, maybe Tuesday. John, memories of fatty burritos and drum circles. So fun, right? AK, good morning. Kind of crazy. Haven't seen that name before. Glad you're here. Huh. Touch of Gray. Favorite song. It's a great song. June 19th, 1993, Soldier Field. Just coming down from that show, right? All right. Good morning, future winners, futures. Future winner, futures. Good morning. All right. Glad to see everybody here. Why don't we jump into the charts and we have a little chat at the end here. So here's the E-mini S&P daily chart. So again, we were just discussing switch day is probably going to be on Tuesday. Still in range, still in balance breakout rules. We looked to the high, we rotated to the low. We rejected price below the area of balance, and we went all the way to the upper area of balance yesterday. We've got kind of an inside extended trading hour range today. We increased open interest by about 39,000 yesterday on this push to the upside. But again, it's always questionable during rollover if that's more of a function of rollover or directional activity from longer time frames. It's one of the things that makes rollover so tough. Taking a look at the 30-minute chart. So we nailed it on Wednesday. We said, we're going to look at the high from Monday and the low from Tuesday as our extremes. And it really has remained the right thing to do is to be patient, waiting for the extreme of the area of balance that is known. Yesterday, a little trick to the downside, but all excess below the previous day's low, the market rotates all the way back to the things that you can kind of use as a probability when we're in range bound trade. The destination of a failed breakout and a return back to balance is usually the other extreme of balance, and that's exactly what happened yesterday. We had a couple of losses in Maycoke money. I trimmed those losses, ended up having a pretty good day overall. So that's where we're at. What are we looking at here? Well, we don't really have any overnight inventory. We seem to be catching a bid here and up near our upper extreme of the area of balance. So this is going to offer us opportunity. What did we do yesterday at the end of the day? We put in a late spike. Now, this is probably one of the most important nuances other than the late spike to the downside that was rejected yesterday in the NASDAQ. This is probably the most important nuance that I see today. And nuances have been a little bit difficult to gauge as far as their importance, and ruling reasons have been thin this week. So this is offering us a potential opportunity here in the S&Ps. Remember, range bound to breakout rules. If we can't bring price and accept it outside of the area of balance that we're currently in, we fade the extremes looking for the rotation back to the downside of the range. If we do accept above the range up here today, we could feasibly open with a gap. If we can't close the gap, then we may look for a continuation move to the upside, which could lead us to weekly kickoff high, which is 43.27. Yesterday, we talked about the afternoon pullback high in the S&Ps, which was right here. So this was a potential target to the upside, and it was also a potential area that if we found meaningful participation above, we were going to have to go with it. Well, when we got above it, we piled up a whole bunch of volume above that level. And every time it came back near that level, it became supportive. So these afternoon pullback highs and lows are something we're going to be adding to our kind of view here on the market prep, because they do occasionally offer some decent opportunities. But today, again, we don't really have any overnight inventory. We've found a bid here coming into the open, which can be kind of viewed as an opening call sometimes. So I'm going to be really cautious up against these highs. And if we do find acceptance, I'm going to try and find a way to get a pullback to the previous extreme high, which would be right up here, before looking for a real good opportunity to the upside. I've got to find ways to limit risk. A gap open and a gap close might be one of those opportunities to give us that chance to limit risk. Here's the TPO chart. It's sort of a double distribution trend day. Here's our late spike. Is this a true late spike? There's nothing that is finite and exact, really, in trading. The base of this late spike would be 42.9875. We settle at 42.98 quarter, 2 ticks below it. So what I'm looking at is using this as a nuance, as a valid late spike, and the late spike rules state opening inside or above a late spike higher marks acceptance of higher pricing. We would be looking for opportunities to look for longs. Opening below the base of the late spike would mark rejection of higher pricing, and we would look to see a pullback up to this area, perhaps our overnight high, for an opportunity to the downside. So this whole area here is very pivotal. Well, obviously it's pivotal because it's the upper extreme of the area of balance that has been rejected 1, 2, maybe 3 times. Now, nothing would make me happier than to be able to sit back and say, this is what's going to happen. Nobody can do that. We never know the outcome. So always be thinking about that risk management. Where can I get into this trade that is close to a point of invalidation, so I don't have to lose a lot if it doesn't go my way? Here's, well, actually, I guess I went to the NASDAQ instead of the crude oil, so we'll just do the NASDAQ then. Switch day again, rollover rules. The market really has tested to last week's low yesterday, rejected. We haven't gotten a full rotation back to the upper area or the upper extreme of the area of balance yet. Looking more like we're going to be opening with a gap in the NASDAQ more than the S&Ps. But again, looking at it this morning, we had price relatively central in the area of balance. We added 7,500 in open interest yesterday. And again, it's difficult to know whether that is a function of rollover or if it's actual directional activity. That guy, I think we were going to be looking at Monday or Tuesday for moving into the September contract in the S&Ps. Today, so far, the volume is half the volume of the June contract in the September contract, from what I looked at this morning. So again, we haven't seen a full rotation to the upper extreme of the area of balance here. All right, so take a look at the 30-minute chart. Looking like we are more likely to open with a gap than in the S&Ps. Do we have any overnight inventory? If we do, it is very fresh. This does offer, again, a more important nuance. Gap rules state if we open with a gap and we can't close the gap relatively early, we're looking for opportunities for continuation to the upside. Sometimes even on a gap close, if the market doesn't reaccept in range and or value from the previous day, that can be a support level and keep us looking to the upside. Here's the TPO chart. Normal variation, extreme day. Oh, by the way, 6 out of the 7 markets that we look at here did leave an extreme in the regular trading hour at one extreme of the initial balance or the other. So 6 out of 7. When we get to 30 instances, we're going to have a really good statistically usable way to kind of gauge how often that happens. And, when you see how often one extreme of the regular trading hour session remains one extreme of the initial balance, that's information you can use. We're going to see how we can prove it over the next 30 sessions. Well, I've got a few already racked up, so probably somewhere in July-ish, late July, we're going to get our good statistic in that regard. Anyways, here was the late spike yesterday in the NASDAQ. The market opened above it, looked into it, rejected it. Higher prices went higher. We've got a relatively weak high here. Looks like we're going to be opening with a gap. We have potential repair above. Let's look at crude oil now. So here we are. We're sitting here in the middle, range bound, no real direction, some decent volatile moves created by news. But how do you trade that? It's been a kind of a tough day. We lost 15,000 in open interest yesterday. What's the date today? Today is the 9th. So we're coming into the week of rollover next week for crude oil, and then the week after that for natural gas. So every month we deal with rollover in those two products. We're coming into it now. We're still range bound. We're centrally located. Our little tennis player is sitting mid-court looking for the next volley on either side so he can reach out to it. Volume was actually pretty good yesterday, but there was that false news that we were going to be negotiating with Iran to allow them to sell more crude oil, and then it was denied that was a bad release or whatever it was. So yesterday, kind of an anomaly as far as volume is concerned. We did lose 15,000 and probably got a lot of people whipped out of this market. We don't have any overnight inventory. Look at the tiny little range we have last night. It's right inside the value area and centrally located inside value from the range yesterday. If I'm trading crude today, I'm going to probably let the first hour of the market play out, look for opportunities at the extremes of the initial balance initially. But I'm kind of looking at this without some new news. This market is just going to kind of randomly move back and forth, rotate, whatever you want to call it. It looks like it's going to be kind of a challenging trading day. If we're in short time frame control, you've got value area high and low, volume value low, volume value high. Our overnight high is pretty much TPO value high, and the value low is all the way down here. We're right in the middle of value from yesterday, and I don't see that there's an impetus for any big moves today. That said, you better keep your eye on the news because something is bound to come out just because I said that. Markets love to make a liar out of me. Gold. So big down day 2 days ago, returned back to the center of balance yesterday. What's going to move this market? What is going to create some sort of change today? Maybe some unknown news. There's no economic numbers left to deal with. And it's right in the middle of the range. Be patient. It is short time frame controlled. We added 1,300 in open interest yesterday. Volume has been maintaining, but so has price. Price has been largely, since the 18th of last month, we're largely kind of in this range, right? Well, maybe since the 5th, the 30th of May. Really kind of when we switched to the August month is when we kind of put in our extremes of balance, and we're right in the middle of it. I'm not excited about anything that I'm seeing in gold today, I guess is really what I'm saying. We had I don't know if this has anything to do with the Canadian unemployment rate, but we had a nice spike to the upside, but we don't have any overnight inventory. We're holding inside the value from yesterday. If anything, if we don't find some acceptance above yesterday's point of control, I see us rotating that back down to a volume node down here, but it's not a really big looking opportunity. So I'm probably, not that I've been very active in gold, but I just don't see any really good opportunities. Yesterday, a double distribution or a P-shaped profile indicating a short covering, but we did add 1,300 in open interest. That's the estimated number. There's just not a lot to lean on here. So if I'm going to be thinking that way, we're looking at probable short time frame participation, and short time frame participants trade to short time frame levels. Short time frame levels can be points of control. They can be swing highs, lows, fibs, trend lines. But the problem with that is you don't know which one is going to be respected. So stay patient. As long as we're in range and in value from yesterday, just look for something, as the day goes on. And actually don't even look for something. If something comes to you in gold today, if there's an opportunity that offers a cheap amount of risk, you're not going to have to pay a lot to find out if the trade is wrong or doesn't work or whatever you want to call it. And if you don't see one, don't take it. Don't get wrapped up in the idea that being a trader means you have to trade. You don't have to trade. What about the euro? So dollar took that dive yesterday. The euro and gold were, of course, reacting to that. Euro is, of course, in rollover. Remember that, because that's going to tend to keep the market relatively range bound. And last night and last night, we had an opportunity to see the market at last week's high. The open interest, we had a pretty good boost in open interest, much more so than in gold. We added approximately 6,900 in new contracts in the euro. Is that rollover related, or is that directional? We don't know. Last week's high seems to be the upper extreme of balance. There it is. Do we have any overnight inventory? No. I think we've pretty much reconciled that. Look at our high and low from the overnight. Low and high of value. Those are pretty decent opportunities for us to look for an execution. Anywhere here in the middle, I have no desire to trade anything in the middle here in the euro. Here's the TPO chart. Here it is. Double distribution like gold. Our day session right now traded to the low volume node here, the single TPOs, rotating inside. Don't see a lot. There's somewhat of a weak high here. We have greater excess on the low yesterday, but low excess here, poor low here. Anything can happen here. Anything can happen. And with the being a Friday and everything we've got coming out next week, I'm leaning more towards nothing's going to happen. Here's the 10-year. All right. So last week's low was supportive yesterday. We're right back in the middle. We're still range bound, still short time frame control. Lost 17,000 in open interest off that low, indicating some potential short covering. Maybe some shorts in the hole, but I would imagine a lot of those were taking profits from higher levels in short time frame speculative ways. Here's the 30. Again, the high and the low are the high and low of value from yesterday. It's a double distribution trend day. We've already, I think, tried to complete the repair zone. We may stay in it all day. Take a look at this 30-minute or this TPO chart. So there's the double distribution trend day from yesterday. right? Coming down into this again, this low volume node. We've traded to this point of control. We're spending time between this point of control and an assumed point of control in the lower distribution. You see the high volume node here. Probability says we're going to go down and check that high volume node, that assumed point of control in the lower distribution. But is it worth the risk? I mean, the range so far is so small. I'm establish its initial balance and work those extremes to help me manage the risk. And that's the name of the game, right? Is managing risk. Here's the natural gas. We're getting another attempt, or at least an attempt to continue pushing lower after a potential bear flag. Yesterday lost 21,000 in open interest. That's pretty big for the natural gas. Here's the 30-minute chart. So here's our bear flag. We tried to break out of it yesterday. We actually closed inside of it. This was a nightmare of a day, if you ask me, because this trend line is involved. It wasn't a real strong trend line. It was really just 2, maybe 3 points of contact on this trend line. But typically when we see a bear flag and we break out of it, we're going to see some directional activity, which we never did. It became more magnetic than anything. Well, this morning we've had the opportunity to see a gap. Well, we didn't gap open, but we seem to be trying to reject price below higher pricing, right? Overnight inventory is short. If the overnight inventory brings new business into the downside, that's going to push us lower. We do have, again, overnight inventory largely to the short side. If they don't get what they're looking for down here, we could see this market easily pull back. We talked about this yesterday. Here. We talked about this here. This was our first attempt at a breakout of a bear flag. We talked about it that morning. We said, this market has a lot of overnight shorts. It could come all the way back up to that trend line before I would look for anything for shorts. Well, that would have worked out rather nicely. So it's kind of a similar situation, right? We've got overnight inventory short. This market could come all the way back up to this trend line. But it has to do one thing. It has to re-accept inside value before that's going to happen. Man, I wish I knew. I wish I knew it just one time where I could say, this is what's going to happen. Here's what you do, and we'll all have a great day. But unfortunately, that doesn't happen. Here's the TPO charts. XS. This is the one market that did not leave one extreme of regular trading hours at an extreme of the initial balance. So if we continue to reject and build volume and participation, this market could continue this move to the downside. If we can't get what the short time frame traders are looking for, and that's new down business to the downside, they could rip this market back up to where the overnight started. Right? Okay. All right. Let's see, we got a couple of questions here. Fred, yes. The afternoon pullback is usually something that we're kind of looking at in a directional way. And even though the S&Ps are largely range bound, I was looking at that afternoon pullback because the day time frame was somewhat directional. So we have an afternoon pullback in the S&Ps today, which is pretty much largely our overnight low. That's our afternoon pullback yesterday, and now it's looking like we're going to be opening with a gap. So that's giving us information, right? All right. Some comments here. I don't know if we have to address those, but Well, let's get ready for Friday's opportunities. Make sure again it is Capital Preservation Friday. Let's take our deep breath. Stay humble, grateful, creative, and centered today. Don't wreck the week by going crazy. Don't wreck the weekend by going crazy. And there's nothing wrong with making a little bit of dough on Friday and calling it a weekend, especially if you've had a good trading week. I'm going to have fun this weekend. I know that, and hopefully I'll have recovered by Monday morning. But I will be looking forward to seeing you all back here again, 7:45. Monday morning. Remember, next week on Thursday, no make hog money. And then on Monday, no make hog money, no group coaching session. Tuesday, no make hog money. And then I'll be back here on Wednesday in full force and hopefully nice and rested and ready to go. Blessings to you all. Be kind to yourselves. We work hard. You deserve to do something nice for yourself. And of course, always be kind to others. And pray for peace. See you on Monday. Have a great weekend.